Welcome back to the Bitcoin Layer. I'm Nik Bhatia. Today we welcome Jesse Shrader. He's the founder of Amboss, a very exciting company in the Lightning Network ecosystem. Jesse, thanks for joining the show.
Thanks so much for having me, Nik. I'm excited for this conversation.
Jesse, you and I go back a few years. When you started Amboss, you reached out and you said, hey, we're implementing part of your idea around Lightning Network interest rates. So talk us through, give us an introduction to Amboss, what you guys do, and what your services are.
Yeah, we've got a couple of services. One is really around discoverability in the Lightning Network. So how do Lightning node operators find each other? How do I find out more about individual nodes? And from there, we expanded into a liquidity marketplace because we realized that there was a need for better payment reliability, and that requires changes to the network structure. And there are market forces that kind of push that forward. From there, we've expanded into risk management, primarily for enterprises, and are pushing forward machine learning to help optimize the operations of a Lightning Network node without giving up access to your like Bitcoin infrastructure. But all of this is around scaling Bitcoin for everyday payments and micropayments to really bring Bitcoin to the layer of scale that would match HTTP requests.
Now, Jesse, tell us who the clients are, because that informs the understanding of what the Lightning Network is providing. So you provide a marketplace for channels,
Mm-hmm.
and in that way, Lightning Network providers are able to optimize their liquidity profile or what they're able to contribute routing wise to the network. So who's using it?
Yeah, it's a marketplace, so there's two sides to it. When it first started, it was primarily hobbyists that were, finding new connections. From there, as people want to receive Bitcoin, and so that would be on selling goods, opening a small store, for example. That's on one side of the market. The other side of the market is more along the lines of institutions and larger Bitcoin holders that already have an established node. So this would be LQWD, or known as Liquid. It's a publicly traded company out of Canada that takes Bitcoin and deploys it on the Lightning Network to support routing activity. And in so doing, they'll be able to earn yield on their Bitcoin without giving up custody, which has been a major change. So on the one side, there will be institutions, and on the other side, it will be actual market actors that are selling goods and services in exchange for Bitcoin.
The Bitcoin Layer is proud to be sponsored by Unchained, the leader in Bitcoin financial services. Unchained empowers you to take full control of your Bitcoin with collaborative multi-sig vaults where you hold 2 of 3 keys and benefit from a Bitcoin security partner. This is a really important feature. You can purchase Bitcoin directly into your cold storage with Unchained's trading desk and completely eliminate your exchange risks. Unchained also offers the best IRA product in the industry. You can convert easily your 401k or IRA into Bitcoin while keeping control of your keys. Don't pay more in taxes than you have to. Go talk to them today, unchained.com/TBL, and make sure you use code TBL for $99 off when you create an account. Imagine losing your Bitcoin fortune to a house fire or to accidental damage. A complete nightmare, right? It's estimated that over 30% of Bitcoin are lost forever, and poor seed phrase security is a big reason why. That is why we use Stamp Seed, a really cool DIY kit that allows you to stamp your seed into these titanium plates. So let me show you how it works. They send you a titanium plate. Part of the kit comes with this really easy to use tracker. You slide your seed phrase into the tracker. Now you take the letters that they send you, you take a letter out, and you place it into your device, and then you take this incredibly heavy-duty titanium hammer and you hammer your letters into this titanium plate. Your full seed phrase will be stamped into this titanium plate that is fireproof, accident-proof, damage-proof. These tools have been specifically designed by people working in titanium stamping for over 14 years. So go check them out today, stampseed.com, and make sure you use code TBL for 15% off of your order. Now, you presented some slides for us today. Let's walk through the numbers and so that we can understand what is the usage within the Lightning Network. I think what people want to understand is that we have this scaling solution. We can use Bitcoin in small amounts. We can use it quickly without having to deal with blockchain confirmations as long as we're in the Lightning Network. So beefing up this second layer ecosystem is important. And because it's very important, we want to see the usage of it and look under the hood. So that's our goal today. And there's no better way to look under the hood than with a company like Amboss that is actually trafficking in channels which themselves are utilized for routing, from which they can derive income. And so that core component of why the Lightning Network economics makes sense from a theoretical perspective, it has to translate into real transactions, real revenue, real customers. And you guys have a very interesting and, I guess, singular insight into that sort of arena. So let's go through this first slide here.
Yeah. So kind of just to set some context, like what is Lightning Network replacing? And it is replacing on-chain transactions, individual ones. Now, I've pulled some data together from mempool.space, which is another like data analytics provider within the Bitcoin ecosystem. And one of the most interesting pieces is actually the minimum fee that was paid by a transaction compared to the maximum fee in that same block. And what's most relevant for the Lightning Network is actually the minimum fee, because you're trying to reduce the expenditure that you're making for Bitcoin transactions. And this, over the past 2 years, we've seen some incredible changes because ordinals and ordinals inscriptions became so popular, and it created all of this demand for block space, and that was causing costs to go up for Lightning Network operators. And so, just like over the last 2 years, I've plotted this on a log scale, and so it's actually showing this massive rise of transaction fees. And we've seen like a couple of waves of these transaction fees. And kind of since we started the actual Magma marketplace where people are buying and selling liquidity, we've noticed some big changes in how our the market dynamics of this liquidity marketplace, where one of the pieces that we can actually plot here is each individual order for a channel. So I can pull up this bubble chart showing actually the individual channel leases that one node is providing to another, and each of those bubble sizes is an individual channel lease. And when we first launched the platform, we saw a whole bunch of channels being opened and channels being purchased from one another. And then as the fees increased uh, at the Bitcoin transaction, the transaction cost, then we saw that the orders essentially stopped. And so one of the pieces that I prepared was an overlay of the actual like Magma orders, which are channel lease purchases, um, over the actual Bitcoin transaction fees. And we saw that when the minimum Bitcoin transaction fee increased on the blockchain, that it's essentially our marketplace for liquidity stopped briefly, because it simply didn't make sense uh, to open new channels during that time, because the cost of new liquidity was so high that I think the market overall was just trying to avoid transactions uh, whatsoever. Um, and one of the advantages for Lightning Network operators is that they can actually create payments infrastructure at times that where Bitcoin transactions are very low cost. And if they set up that infrastructure ahead of time, they'll be able to use it during like high Bitcoin transaction fee times. So once you set it up, then you have that infrastructure to be used long into the future, where these channels may last several years and be capable of handling millions of transactions over their lifetime.
Now, Jesse, one of the things as a Lightning Network user myself, one of the things that attracted me to using Lightning for transactions in the beginning was the instantaneous and low cost nature of it. But now that the average attempt of a Lightning Network transaction for me is, I would say much closer to the $100 mark than the $10 mark where it was a couple years ago. And in that effort, I now find that I'm willing to pay almost anything that's fair. So a much more than I would have used to pay on a Lightning Network, which essentially almost zero fees. Now I'm actually willing to pay the fee, and it's almost much more so that I know it goes through, and so that I don't have to wait or guess how many blocks. And that's often a challenge where you want to game the blockchain in a way where you're not overspending on the fee. But if you don't overspend on the fee, you run the risk of just falling to the back of the line and maybe having to wait days, and you just cost yourself a lot of inconvenience. So Lightning is really stepping up its convenience. And what you show in this chart, when the fees spike, the channel activity goes down. But if you do good channel management when they're low, then you already have funds in the Lightning Network. You have liquidity open. You can transact when the blockchain is very busy. And you will probably get charged up for that. So maybe you can tell us, what are the fees people are willing to pay in Lightning now? And mind you, it's the fees that power your marketplace, because if there weren't fees, nobody would want to trade and traffic in these channels in the first place.
Yeah, there's two different like components to it, because on the one hand, there's routing activity, and so routing activity and payments activity within a Lightning channel, that can happen like whenever, and it it moves irrespective of any of the blockchain transaction fees. Um, so like that routing activity can just happen whenever. However, for the marketplace, it's actually setting up new payments infrastructure, and so that does involve a Bitcoin transaction. So there is some timing component to it.
Yeah, so then tell us, if what are people charging? What are people actually earning now? Part of my original study was estimating that there would be yield here and the yield would be non-zero. That was what was so fascinating to me. People then were rushing to say, "Oh, how much can I earn?" But was quick to say, "Hey, it's less about how much you can earn than the theoretical construct of having a Lightning Network derived interest rate from transaction routing." So, but now we're more than a few years into this. So I know people are earning because they're trafficking in channels, and they want the channels because of their earning power. So it's like that discounted cash flow. So now you can get your interest rate hat on, Jesse, and just give us the full lay of the land when it comes to Lightning Network interest rates.
Yeah. So Lightning Lightning Network derived yield actually comes from payments activity that is happening, and the routes that are selected on which nodes on the Lightning Network to pay through is actually determined by the source of the payment. And so they're going to select a route to go through this network, similar to how you would choose how to drive to the store. Which roads are you going to take? Now, if we imagine that every single road is a toll road, um, that and each road had kind of variable tolls, well, you would need a whole lot more support. You would need essentially Google Maps to determine what is the optimal route in order to reach your destination. And the exact same thing happens in the Lightning Network. So this route selection, currently most people use the default LND, so Lightning Network daemon, and they're going to be doing a pathfinding algorithm on which route to take. And what it will attempt first is essentially what costs the least and what worked last time. So it's trying to balance imperfect information with actual, like, what was my history. So we call this a priori routing, and it's essentially what worked last time. But it's a market. So all of the tolls on each individual hop of a Lightning Network payment actually changes. But what we see is that the market itself, like who is participating in the Lightning Network right now, are very altruistic oriented people. So these are people that want to support the Lightning Network as a functional scaling system for Bitcoin. And that's the reason that they've introduced Bitcoin into the system. But it is a market. So when you have these altruistically motivated people, they're essentially charging zero to have this routing activity. But they're not yet mature enough to maintain those channels, those payment routes. So if we imagine that if someone builds a road but they don't maintain it, well, the road becomes degraded, or there's just too much traffic and you really can't get through. So now we need to find alternate routes. But like, information about the status of the Lightning Network is not public by default. So part of the work that we've had to do with Amboss is actually do some crowdsourced data collection. So this starts to look a bit more like Waze, where you might report an accident on the road. And now we can use that type of information to provide more optimized pathfinding on how do you get from point A to point B. Now, like the actual fees that a Lightning Network operator could charge, I would imagine would be related to how much a Bitcoin transaction fee is, how it compares. because if a Bitcoin transaction fee is going up, then a Lightning Network operator could theoretically charge more. However, we need operators to be paying attention and changing with that market to extract as much value as they can. That would be like the selfish router. But when we have altruistic providers here, um, the payments are often seeking those altruistic providers. So they're going to choose that zero fee route. And so the actual, like, we've got self-interested folks that are looking to extract value from this payment system that are competing against the people that want to charge zero and just do it out of the goodness of their heart. So right now it's very interesting because we have this like market competition with people that are essentially donating their time and infrastructure and their payments infrastructure.
Jesse, won't those altruistic routers eventually need to top up liquidity, do channel management via the blockchain, and spend on chain fees? Won't they have to spend money to maintain, in using your toll road analogy, making it so that eventually they'll either have to do two things? Either they will have to increase the fee to accommodate that, or they will close the road because it's too expensive to maintain. Do you anticipate that, or do you just anticipate this infinitely lasting arbitrage in which yield disappears because there's all this altruism?
Um, you're absolutely right. Like, all of those maintenance activities have real costs. So if you want to continue to provide routing, you have to maintain things. And because that is costly, we'll see, like, and what we have seen is that people drop off the Lightning Network. So those altruistic providers, now they're starting to realize, oh, I'm not actually getting rewarded for this. Maybe it's not a good use of my time and effort and Bitcoin to, like, actually provide this routing if I'm not incentivized to do so. So what we saw, like, when people look at large Lightning Network metrics, like the capacity of the Lightning Network, the number of nodes, the number of channels, all of those have actually been decreasing over the past 2 years. And I think a lot of people have looked at that at its face and saw that as a bearish signal for Lightning Network technology. And I think that was the wrong conclusion, because what we actually saw was the average channel size increase. So while the number of nodes and channels were going down, it was a it's a pruning behavior that happened, and there was more focused allocations of Bitcoin in order to provide the throughput that actually provides that yield on Bitcoin. And so what we saw, over the past 2 years is that operators weren't being responsive to Bitcoin transaction fees. And because of that, we saw a lot of nodes and channels close. And so when we have a bit more focused activity and more market maturity, I think that will be a time where Lightning can have explosive growth, especially with some of the like new paradigms that are happening with Taproot assets and other developments.
Now, we at the Bitcoin layer, we have great familiarity with companies in the Lightning ecosystem. Voltage was our sponsor early in our channel, as well as River, a previous sponsor of ours. I see River, almost dominates some of these node statistics in terms of what they're doing. So I'm curious about what companies like River, maybe you can single them out, or companies like River are doing to maintain Lightning Network nodes in terms of liquidity management? How active are they? You can be generic in your description, but how much work are they doing when it comes to moving sats around in order to be that router for the network? Are they doing so with a fee structure that mimics altruism while also representing the market in some way? I'm really curious about uh, how a top Lightning node is able to stay at the top right now. What does it require?
Yeah. Well, and I'll be limited in what I can speak about, simply because the actual state of a channel is not shared by default in the Lightning Network, and that's primarily due to privacy reasons, or a desire for privacy. But what we do see is the actual capacity of a node, and I'll see that the capacity of a node changes so rapidly that no human would be making those decisions. And so when I see a node like Binance, for example, which is routinely opening 2 and 3 Bitcoin channels, um, what I can tell from that is that they're using some type of automated script in order to open channels. And that's usually based off of the payments that have occurred. And like from there, I think it makes a lot of sense just to continue to like allocate liquidity like that based on the information that your node has received. And I think a better approach, and one that we're pursuing with Amboss, is actually using the entire network data set, and taking a holistic network level approach to say, actually, what we want to maximize is the maximum flow between nodes on the network. So if we know some information about where payments are going, um, where payments are coming from, then we can actually provide optimizations, and use some of our machine learning practice in order to provide better insights into who you should be connecting to actually maximize the throughput. Because the only way that you're going to get yield out of your node and your payments infrastructure is if there are external parties that are routing payments through your node. So you'll want to be optimizing your betweenness. So it's basically, if you're operating a toll road, you want that toll road to be between really popular destinations, and you want to be routing people. It's not so much that you can simply throw Bitcoin at the problem and hope to get yield out of it. The position is extremely important, and it's a bit non-intuitive. So there's not a direct relationship between Bitcoin introduced into the Lightning Network and actual yield getting out of it, or that interest rate.
The only thing that comes to mind is actually currency. So you to have a popular currency, you have to have lots of people using it. So if you want people to use your Lightning node, you have to be a popular Lightning node. It's kind of the way to think about it, I think. But it's different than anything else, and that's the nature of Lightning and Bitcoin. They're truly native and emergent technologies that don't have the best way to compare because they've never existed before. Uh, Jesse, I want to ask you about your liner yield slide, 1.719%. What does this number mean? Does it mean people can earn 1.7% on Lightning? And I want to also, mention quickly, because you talk about how difficult it is to be this toll road provider, to be this Lightning Network node operator. You can't just throw money at the problem. People often ask me, do you own and operate a Lightning node and route payments and generate yield? And might be surprised to learn that I don't. And I asked them, would you rather me spend time doing a Lightning node management or writing and researching? Because that's really the trade-off. I can't do both because one would take time. So you can't just throw Bitcoin at the problem and expect to route. You have
Yeah.
to be a router. If you want to operate a toll road, you can't just buy the road. You do have to hire the toll booth, the manager, and the maintenance crew, and you have to probably visit the site and probably have to have some idea of road maintenance and infrastructure, generally speaking. And so, if that's not my skill set, how am I going to be a good or even decent Lightning Network node operator? It's not possible because I'm a researcher and a writer, and that's what I have to focus on, or else the second book will never come out. So, Jesse, what does this number mean? Who's using it? Who's getting this yield? And what type of overall information signal do you get from 1.7%?
Yeah, and uh, I love that you said that because I've had like a similar decision to make. Either I'm going to be running a company and being CEO of Amboss Technologies, or I'm going to be essentially playing with my Lightning node at this stage. However, like we do have to build the tech for the future of this, which is far more fruitful, and there is some massive market movements that could happen. Given that global digital payments is a $14 trillion market. We do want to build out this infrastructure that is more decentralized than existing. However, saying that, um, I pulled data from my own Lightning node just to see what type of routing income I actually made not trying to be a router. So this is me just doing very passive things. And I think I used a couple of different denominators here. The routing based on the balance that I actually had in my Lightning node, and the routing that I had for that was based on the inbound liquidity that I had. So this is basically like the inbound liquidity. You can almost think of that as like your popularity. So how much Bitcoin have other people allocated in the direction of your node? And that's not giving it up. But then looking at it from the capacity point. So this is more about like how much throughput, which would be the sum of that inbound and the balance that I have. And I've found that the actual earnings are 0.06% essentially, which is not very meaningful. However, like making network changes and actually leasing my Bitcoin. And so this is using all of my popularity, my inbound liquidity, and opening a new channel to someone else that is a popular destination of payments. Like that's where I could earn the most. And so this is actually changing the structure of the Lightning Network and serving an economic purpose, where someone is running a store, and instead of paying Visa 3%, well, maybe they want to pay a tiny fraction of that in order to get Lightning Network infrastructure. And from that, I can use my Bitcoin to solve that problem at a far lower cost than Visa and extract essentially this liner yield, which is most recently 1.7% on an annualized basis. And most of these contracts are generally 1 month, but those contracts can be different durations. So I've annualized it similar to what you set up with the Lightning Network reference rate, just to have kind of a constant duration. So this liner yield actually it's a weighted average of the individual uh, channel lease contracts. And it also takes into account the Bitcoin transaction fees that I am using to open the channel. And then in the future, I'm making a prediction on what the channel will cost to close in the future so that I can have a full, cradle to grave, a Bitcoin, on-chain Bitcoin, and, extract yield out of that. And so
Great.
that's the factor that we're really looking at.
Yeah, and we'll also, encourage you to release gross and net numbers as you go, other things that just bring more information. What is so fascinating about Lightning Network and Bitcoin broadly that is underappreciated, Jesse, is that what the arena that you guys are operating in is a pure market-based system. And there's nothing other than a drive to the lowest fee or the best route that makes up the network. That is it. You mentioned altruism, you mentioned people wanting to kickstart the network and allowing for that. That of course has to happen at the beginning. But for a network to operate, you have to have the internal market metrics, and the demand for channels is the demand for routing and transaction capability. The demand for channels leads to a demand for block space. The demand for block space leads to fees for miners, and the whole security of Bitcoin is enforced in part through this little nascent network within Bitcoin that is just getting started. It's so fascinating and exciting. And I hope that through time, people will appreciate Lightning Network's role in just demonstrating that this is a pure market and nothing like this has ever existed with money before. So, Jesse, any closing thoughts, and tell people where they can find you, your company, and your work? Remember that the Bitcoin layer is not sponsored by Amboss in any way. Our job is to bring you guys information, and information that interests us. And we are Lightning Network participants and enthusiasts and theorists. So your perspective is much appreciated, Jesse.
Thanks so much for having me, Nick. Maybe just to close up, I love what you said about just providing information and surfacing it, because it is one of the hallmarks of a completely free market system where you do have free flowing information and you can make informed decisions. And really, that is at the core of what Amboss provides. If we can surface the data and deliver insights, we should have a far better functioning economy with this new system. And that's basically what we do. So thank you so much for having me. If you want to check out more statistics, more information about the Lightning Network, go over to amboss.space/stats, like statistics. And you can see all of the data going back for 3 years. You can have high quality enterprise data. If you want to start playing around with the Magma marketplace, maybe sell some channels or buy some channels and start moving payments over the Lightning Network, we can help you out there too at amboss.space.
Great. Jesse Shrader of Amboss. I'm Nik Bhatia. We'll catch you guys next time.